Hi guys, hi everyone, welcome to IC Market webinars. Should we just wait for 2 minutes, okay, for everyone to tune in, and then we'll start the session shortly. So today's topic is all about moving averages. So if you have any question, just set in all the question in the chat box. All right, at the end of presentation, I'll bring you guys to the trading wheel to practice together. Okay, shall we start? So I don't want to keep you guys waiting. Okay. Again, welcome everyone. Good morning, good afternoon, good evening, wherever you are. Okay, good evening from Singapore, guys. Okay, so before I start the webinars as usual, okay, remember that everything in this video is educational in nature. Okay, nothing should be construed as containing investment advice or an investment recommendation. Okay, and risk warning over here: trading forex and CFD carries a high level of risk to your capital, and it's not suitable for all investors. Okay, so please come and join the webinar and learn together. Okay, so the agenda for today I'm going to cover, which is when to use the SMA and EMA, and explore the different moving averages from different time frame, trade the trend with moving averages, like trading examples. Okay, so introducing your host today, my name is Peggy. I'm an investment analyst and proprietary trader as well. This is my certificate that I have passed all the challenges. Okay. And so what SMA versus EMA, what is that? The key differences, which is, okay, if you want to use SMA, okay, it treats all the price within the period equally, okay, resulting in slower reaction to recent price changes. Okay, for EMA, give more weight to recent prices, making it more sensitive and quicker to respond to the price changes. So I personally use EMA. Okay, SMA, I'm not use SMA, but I use EMA more because it's like I'm more to I want to see the price react faster. So if you want to use SMA, I will plot in the chart. I will show you guys later. Okay, but the difference is that lagging. So SMA is more lag, and it average out or prices equally, leading to slow reaction to price movement. But EMA had more quicker signal due to the weighting of recent prices. Okay, what does it mean is that let's just go over to the chart. If you to should we just maybe use gold for example? Anyone short gold at this resistance level? Okay, check. Now it's already TP. Okay, this is kind of like first support here for this swing high. Okay, so what if here I do have EMA? Okay, so if you were to use SMA, which is simple moving averages, which is 100, it's over here. Okay, based on gold. Okay, gold to me, what you can see here, and EMA 100. Okay, there is EMA 100 versus SMA 100 day period. Okay, you to look here, the red one, which is SMA, what you can see that is kind of like quite slow over here. These are SMA and this is EMA. So another thing is that as moving average. Okay, they can acting at the resistance level. In this case, they also can acting as support level, which is somehow is here. Okay, if you to want to test out, okay, EMA work pretty well with gold, okay, rather than SMA. What you can see here, okay, what you can see over here, price break above EMA 100. These are EMA SMA 100 over here. They kind of like zoom in here. Once they break above, what you can see that they pull back and continue the uptrend, meaning that this one they acting at the support level. Okay, and then this very strong uptrend here. You can try, but I prefer to use EMA rather than SMA for gold or for any pair. Okay, for example here, if you were to trade by using the SMA here, price break below SMA 100, break below this is EMA 100. Okay, in this case price it pull back as SMA 100. Okay, and break below again, now it's pull back as the resistance level. This one is 100 EMA. Okay, and this one is 100 SMA. Okay, so you can test out and you will see which one it work well with certain pair. But for gold, okay, I use EMA 200 and EMA 100, and there will be another EMA is 50. Okay, this just want to show you guys how it react if you were to go to gold in H4. You can try in M15. It's quite similar, right? From here. Now, when price break below, I mean here, okay, break above, pull back, continue, and now pull back again, because now they are acting at the support level for gold in M15, right here. This one, okay. You can try, but like I say, I prefer EMA rather than SMA. Okay, and the calculation is complexity, which is SMA is simple to calculate and understand, but EMA more complex calculation due to the weighting factor, but provide a more responsive average. Okay, so in summary, SMA is best for a smooth and long-term view of the market, while our EMA is better for capturing a short-term movement and reacting quickly to recent price changes. So for gold, like I just say, if you want to like scalp gold, let's just maybe we go to like use EMA, okay, 100 and 200 in M5, for example. What you can see over here, above here first, okay, price break above, now pull back. If in this case you want to know how to trade gold, here rejection acting at the support level, and the ending with your price action here, and this is a support level. So we're gonna buy here, wait for price to pull back to the EMA, either EMA 100 or 200. And what you can see here, one price go above EMA 100 and 200, and this is in M5, it's really strong uptrend. Okay, one price, where is it, break below, now it's acting at the resistance level. Okay, of course in EMA 200 they will kind of like bounce a little bit, but now they're acting at the resistance. Either you sell here, you're gonna use a TP here for the scalping. Okay, these are M5. Again, the trick is that one price cross above EMA, either 100 or 200, and you see that there is a big gap. Okay, like here, there's a big gap here, and then you should know that price is really there's very strong uptrend. Even though you can see the EMA 100 and 200, it you know, far apart from each other. This is very strong uptrend, so you can hold your buy position. But one price is like if both EMA 100 and 200 is close to each other, meaning that the market is ranging or sideways, which is here. What you can see here, a really strong uptrend, right? M5, really strong uptrend. Now both EMA, you know, close to each other, get smaller and smaller. The gap below that is really ranging, okay, because they're very strong uptrend. They will ranging first before they continue to fall or before they continue to go up, because later they're gonna have a news for the US dollar, so we need to take note of that as well. Okay. Hey, hello AJ, nice to see you here. Okay, now I just teach you guys how to use EMA to trade gold. Okay, so I use this method to scalp gold at least 30 to 50 pip. Okay, let me know if you have any question. Okay, so the difference for moving or MA from different time frame, like I just mentioned, the short term, either you can use EMA or SMA 5, 10 or 20 for the short term, because the usage idea for identifying the short term trend, potential entry exit point, often used for day trading or swing trading. For the medium term moving average, you can use, for example, maybe you can use 50 EMA. Okay, for the short term as well. So basically I personally don't use 5, 10 and 20. Okay, for gold I'm using 100, 250 EMA. Let's just, okay, here. Okay, how it work? Can you guys see the difference of the color? Can you see the color is different? You should, right? Maybe I change EMA this one to red so you guys can see. Slightly make it slightly thicker. Okay. For very strong uptrend, if you want to kind of like hold your either buy or sell position, either in M5, M15. Let's just go to M5. Okay, for EMA 50, it really works well if gold is on if they are trending. Those are trending market. Okay, you can see that this is 3 EMA. Okay, once price cross above, pull back. This is very lovely buy entry here with the price action. You can see this one, right? Price action. Okay, let's just say, okay, you enter buy order here, you buy here, buy gold over here. Okay, one price pullback, you have another entry for go here for the buy entry, come back, pull back, have another buy. So EMA 50, okay, it worked well for the trading market. Okay, one price, okay, kind of like move back to EMA 50, you should close your buy position. Why? Here, over here, that is cannot make a high, they make equal high. Just look at M5. This is your price action. If you were to go to the higher time frame, either H1 or H4, this is your H4 time frame. This is your swing high, right? And either we highlight this our resistance level. You can see that one price go to resistance level, your rejection. M5 will give you the sign that they're going to reverse here. That is your price action. This is our either sell zone or your resistance zone, or whatever your supply zone, either you call. Okay, there's your price action here. Once you see that price come you know, going to like reverse from this, you should either you close here okay, meaning that we have how many buy, you hold. Either you can use tailing stop loss, or you buy here, pull back again, you have another buy, another set, pull back again, you have another buy, and then you hold. When price come here, because why price is come rising to the resistance level, and price action here, you should close all your buy position, and you should open the sell order here. Okay, very strong uptrend. What we can see here, once you close, okay, just move a little faster. What you can see that stop here, right? Price break below, now pull back, it acting as a resistance level and continue to fall, and you can sell. You should sell here. That is your sell order, your sell entry is here. Okay, because now they are acting as the resistance level, and now you can see, you can notice that the EMA or SMA, okay, they kind of like curving down, meaning they are already changing from uptrend to downtrend, right? You can see that. And of course, if you know how to trade, we will know that where we should enter, buy or sell, because we will look at a higher time frame where is our key support and key resistance. So if you know how to identify the key level, combine with the EMA either 100 and 200, and you can combine with the RSI to find the divergence. For example, this one I don't use it, but I just want to test it out. The most I'm using, which is RSI, this I'm not use. Okay, for example, now M5 just now, right? M5, what we can see here, based on what we can see here, one, we see there's a price action, and this is already overbought somehow. Okay, go to M15, also overbought here. Can we see the divergence? There is no divergence here, by the way, but also already overbought based on the higher time frame compared with the RSI. And price come all the way here. Let's just double click on the higher to make it bigger. The highest one, they go somewhere around this one, which is 85, and now price go up here to 85 based on H1, and H1 M5 have price action. H1 price ending with bearish engulfing candle, or either you want to identify this our bearish order block, either one. Here, what we can see here, if you wanted to highlight bearish order block, should I just change the color? So you guys can see. Here, let's say price closing with bearish engulfing or bearish order block, whatever you want to say. Okay, price view how we trade ending, now pull back, so you're gonna get your buy another sell entry, and then you continue to hold, because this is your sell zone. Your sell zone gonna be at bearish order block here. This is your sell zone, right? You can see that price go up, back up here, and then continue to fall from this candle and continue to fall. Okay, here, this is M15 look like. Okay, this is our bearish order block based on H1, which is here. Okay, and then price go in the zone here, the box, and then continue to fall here. Either for scalping, you go to sell from 2473 all the way down to EMA 50, about 90 pip or 972 point. Okay, for gold, that for scalping, that's already enough. If you want to scalp gold, because you can find the entry based on the EMA as well. This is how I trade if I want to scalping gold. Okay, any question? Okay, for the long term, okay, for the long term, this I'm using 200, 100 and 200 EMA. Okay, I'm using EMA. I'm not using SMA. Maybe we can I can show you guys, like, let's say I'm not, let's just maybe we'll compare with SMA now 200. Okay, this is SMA 201 and 200. You can see that they're acting really slow, right? If you were to like this is SMA. Okay, if you were to put EMA, which is this one, no, don't show this one. SMA also work, but I mean, like, this is SMA 200 reacting at the resistance. These are your resistance level, right? This is your resistance based on like this weak rejection here in M15. You can see the price break below, pull back, and then you short. If you were to sell here, 300 pip at least from here falling. You can see that where your TP, I always say that when you want to put the TP, you should put where 99.99% based on my I always 99.99%. okay, I don't say 100%. You put at the body, it will trigger your TP here. If you trade on M15, you can just close your TP on M15. Oh. Eh? Why you cannot? Here. If you trigger, okay, this is mine because there might be split, but it depends. But if you I see my get usually with TP, but other broker, you know, sometimes the spread is very high. If you were to put at the wick, you miss out price, you will reward and hit your stop loss. Okay, so always put at the body, not the wick. Even though if trigger your TP, price going another 100 pip, you tell yourself that it's okay. Okay, don't feel like, oh, I should you know, put this, I should do that. No, because if you have the knowledge, you can just earn money every day. Okay, or if you don't put your TP, you just use your trailing stop loss. Okay, so you can secure the profit. If EMA 50 up and another EMA down, what will be the scenario? What do you mean up and down? No, usually they will go together. You need to wait for like EMA to close each other. Okay, I will get back to you later because I think in the slide there will be the example, the closing, the crossover one. Okay, so you can use the EMA for the trend identification as well. So we use the moving average to determine the direction of the trend. If the price above moving average is uptrend, if below is downtrend. So if you want to use EMA, I recommended you to use EMA or SMA 200, okay, for identify the trend. For example, just use one, no need to use so many. Okay, let's just use EMA 200 in gold for M15. Okay, now once price break above, go above, uptrend. Okay, you can really strong uptrend. One is break below, is downtrend. And again, let's say, you know, let's say we short here. Okay, you short here, price go up here, and then you panic already. You panic, oh, you're going to stop loss. No, why I'm not panic? If I were to sell here, I'm gonna sell another one here. Why? Because you would think, oh, Peggy say price break above, you're going to change to uptrend. But in this case, sell here, price go up, another here. No, this is not changing trend. why this is my another sell zone here, right? This is our somehow resistance level based on M15 or from here. This is my another sell zone here, right? So if price I sell here, and if you don't know how to look at market structure, you doesn't know price break or like market structure, because let's say if you don't know how to look at the chart, right, you might get a panic. That's why I say you need to have the knowledge. I short here, price reverse here, I will have another enter sell position here. Why? This is my pullback resistance. Okay, what if I also use Fibonacci? That will be at 78.6%, I believe, I guess, somehow within this zone, right? So if price haven't break above 78.6, so this is gonna be my sell under this sell entry, and then you hold. One price break below, because why? They for another technique, ICT, this is market structure chip, so you don't need to be panic, because if price going to on uptrend, they shouldn't break this low, they should continue to go higher high. But if you just look at M15, this is what ego high, or somehow they look like the M pattern. Break below, make a market structure shift here, pull back to where M15 is our pullback resistance. Somehow haven't go above 78.6%, and one price go to our pullback resistance, it become overlap the rejection here, our price action, and then you can have another short entry here. This one still floating loss, right? But you know that if price go to this zone, I'm gonna short, and then you hold. One price hold, pull back, either I have another sell entry or this is another sell entry, and then you hold, because price break below EMA 200, okay, in M15, and then where your TP, it will just trade here. Your TP aim for this one support level, which is here, okay, here. So how many pip from second entry, let's just say here, to either here 5,000 pip, 500 pip for gold, okay? So you go and practice, and then you see that, okay, this was strong downtrend. Okay, what about H4? Also can work well in H4 as well. You can see that EMA 200 break above, now pull back, it acting at the support level in H4 time frame. Zoom to see support level, and somehow this is also our support level as well. Here, right, you can see that pull back, price break above, pull back, you can see that, zoom in to see here support level, so you can buy. What about we use eyesight, you will get seen where your eyesight, you should seen you buy here, right? You can see your support level, you buy, and then you hold, and then they're really strong uptrend. Again, don't always like this is overbought, also I'm gonna sell, gonna buy. So no, eyesight, okay, I will use eyesight mostly for divergence. If I want to see that whether price overbought also, and I want to see whether price at the key level or not, okay, if I read at key level, then I might short. But if I want to short here, then I'm gonna trade against the trend, because it's really strong uptrend. You want to look here, one price go above, go far away from the EMA, very strong uptrend. If I want to short here, sell here, you want to sell here, because eyesight also overbought, right? You want to short, sell here based in H4. Where is my TP? My TP, you want to aim here, price is not really strong uptrend, okay. 3P at least I just aim for 50 to 100 pip if I enter in H4 time frame, okay. So if in H4 time frame, you can just hold at least 100 pip, which is if I were to short somehow at this level, I hold here, to like this swing here. Okay, 3,000 pip, easy, right? This is a head 4 time frame. Okay, zoom to see why we short here. Either you say this is our key resistance. Okay, head 4 time frame, somehow price cannot break above this level, rejection. This is somehow like overbought. Okay, sell here, as after you sell, you hold, they make a lower, kind of like, you know, lower low. Okay, and at least my TP is at this body, the body is on the left, which is here is my TP. Okay, you can see that I refer to my left, the body of the candle. Okay, not the wick. Even though if you put here, it will get a TP. Okay, but not 99.99%. Most of the time I just put at the body. I want to make sure that I trade, I collect the money. Okay, so here TP, even it continue to fall, doesn't matter. Okay, now it's reverse in head 4 time frame. Here reverse where reverse to kind of like the neckline here, and then you have another short entry. Okay, here resistance level, price action, rejection, open, you open the sell entry here, and then you hold to where, let's just say if you hold, okay, and then you want to hold all the way down, but it seems like rejection, and then price, it seems I want to go, at least you aim for here your TP. Okay, this is your TP, another TP, you to have another like enter here. That's how many pip, more than 150 pip for gold. Okay, and then they continue to go down, and then now to go up. So so for gold, if you trade gold at least 100 to 200 pip per day, I think that is possible. I don't say it easy, I can say easy if you know how to trade. Okay, so I will just say it's possible. It's possible, nothing impossible. It's possible for you guys to, you know, trade gold to aim for 100 to 200 pip per day. Okay, if you scalping gold based on either EMA, you look at market structures, or and then you read the candle. Okay, you can do that. Okay, but it will take time. Okay, not like within 1 day or 2 days. It will take time. Just keep practicing. I think you will be there one day. Okay, what about we try with another my lovely GBP. Okay, my GBP is at my resistance level. Okay, what we can see here, remove my key level. Now EMA 200, one break above, pull back, support level, buy, strong uptrend, come back here, break below. Now it's acting as the resistance level. Okay, this is break below, now pull back, it become resistance. So now we're gonna short. Okay, here, and we will identify, of course, this is our resistance level, this is our support level, right? Okay, so you can see that this one should have divergence. This is acting the resistance. I guess this should be divergence. Let me pull out the eye side. This is our overlap resistance level. Yeah, there is a divergence here. Price make high, which is at the key resistance, right? Also just slightly above EMA. Okay, so it's not 100% that price will stop at EMA. Somehow it might just go above like this one, but if you were to short here, price go up here, you will know that, oh, there will be overlap resistance level, price make high, but indicator it make low high. So this is a bearish divergence based on head 4 time frame. So you can hold at least 100 pip. If the divergence happen in a higher time frame, you just hold. Okay, where your TP, first aim for this support, that is gonna be your TP. You will to short here to here, 139 pip for GBP. Good enough. Okay, that is good enough for the day. Okay, and then you don't want to put TP, just use the tailing stop loss. Okay, just use the tailing stop loss if you want to keep holding your position. But I'm a day trade, so I don't like to hold my order like overnight. Okay, so this is identify trend. Okay, so it's worked very well with currency pair as well. What about the indices? Bearish order block, I think this should be based on higher time frame. Okay, for the indices, just seen here, bear head for where? Here, downtrend, right? You can see that acting the resistance level, break above, pull back. Okay, when you break above here, like break up, like here, break above, we buy, and then you hold, come back again, you buy, you have another buy here. Okay, because this is our, look to your left, resistance, now it become overlap support. Okay, so we buy, and then you hold, and now you can close. Okay, you can close your buy entry here, because it seems like price break and pull back, because now we see the graph here, so we know. But based on whatever we learn, one price starting to go back in you know, to the EMA, you should close your buy position. Okay, you have a buy order, you just close, because head fall here, since here they make a lower high, it seems like they changing uptrend to downtrend. Okay, but one price break above and pull back, you can buy. Okay, now this is acting at a support level and then continue to rise. Here should have a divergence. Why? You can see that head for time frame here, where you can see there is a price action here, another price action falling, have a price action over here. What if we pull back side, bearish divergence, overbought, there's a divergence versus, you can see that, then you hold. Okay, you hold here, this is bearish order block. I think I do on the daily time frame. So this is my bearish order block based on daily. So price come to the block here, and then we have a sell order. You can have a sell position here. Okay, this is how it H4 look like. We seen here. Okay, sell here, TP, either the wick or the body, go back up again, where the price come to the zone, you have another sell entry. Okay, then either you hold and then continue to fall, and now it acting at a support level. Okay, you can buy, and now you need to either you close here for EMA for your TP, pipe go back up again, bounce, now they break, pull back, now they break. Okay, now pull back, and then you sell, right? I will stop here. Based on the chart, it's very clear that price is make a lower high, right? So that's why you either price go back your TP here, go back up again. If you know how to trade, either you short, you close, we buy up here because we have a rejection, price action here, go back up again, and here also have another price action. I will see there is a divergence here, I'm not sure. Like that, no divergence, then we don't. Okay, go back up again, price make a low high, price action here, and then you can either you short or you just hold if you swing, because price come from your bearish order block, your price action hit in daily. This is somehow your resistance level, you might to adjust is here, right? Then price falling, this is due to be support level, now should be overlap. Okay, so you can use EMA 200 to identify the trend. Okay, so now crossover, golden cross. So when a short-term moving average cross above a long-term moving average signal potential buy. So now I'm going to use, just go to go, EMA 50, use EMA 50 and EMA 200. Okay, EMA 50 is a red color. Okay, once zoom head 4. Okay, if you trade for a long time already, you should know that one day the trend like really strong uptrend or downtrend, you can see that price or chart will be ranging first, right? This is a ranging or just sideways here, right? And when you see price sideways or EMA, okay, it crossing the candle, you shouldn't trade because it's a ranging market. Okay, now EMA close above, you can see the one close above, you should buy. You open buy where? You open buy at this candle, either here at this candle, buy, close above this candle, you opening, this is your buy entry at this candle, because this is this one. Okay, you buy here because EMA close above, you have another buy entry, this one, and then you can see that pull back, have another buy. Okay, and then you should close your buy for gold because price already cannot make a higher high, rejection, and make a lower high. It break this market structure shift based on this candle. This is your low here, right? This is the low. Okay, because of this candle break below this low, they make an equal high. Okay, price pull back to somehow here and then continue to fall. Okay, buy here, another buy, second buy should close. Okay, and now you should sell. One price break a market structure shift because of this bearish engulfing candle here. Okay, now it pull back and continue to sell. At least TP, this is your TP at EMA 200. Okay. You guys have any question? You guys have any questions? So just wait for the crossover. What about I pull the eye side? Okay. What is my eye side telling me? One price pull, cross and pull back here. Why is my eye side here is somewhere at about 50%. So this is ours. Buy here, go up, pull back. Okay, buy here, go up, pull back. Have another second buy entry, which is here. Oh, here, right? You can see that at 48 eye side here, and then you can buy another buy here. You can see that 50, almost 50, EMA 50, and then you hold. Okay. Any questions so far? Okay, so for that clause, when a short-term moving average close below a long-term moving average is signaling a potential sell. So it's the same meaning. If EMA close below, we're gonna have the sell. Go to M15 for scalping here. Okay, break. If price just sideways like that, you don't trade first. What you can see, close below here. Okay, and then you sell. Okay, in this one, zoom to see. This one close, you sell a little bit for scalping, and then price reverse to up here. This is should have another entry because of they come to this level. Okay, and then you can hold, sell here, and then you hold. Okay, based on M15. H4 close over you buy. So now haven't closed below yet. So not every time like close above or close below. We just use that to see, not relies on the just EMA close over. Okay, like this one close, you can buy sideways first. Price should come from the support level. Like this one as well, close above you buy. Really strong uptrend in H4 time frame. Okay, you see close below. Let me just find for gold. Okay, here. Okay, break below, pull back, acting the resistance. Break below, pull back. Now we have another sell, and closing is here, right? Crossing is here, and this one is also our pullback resistance somewhere here. This one is a resistance level. Okay, then we have the opportunity to find a short entry over here. Okay, and again, like I just mentioned, or moving averages can act as dynamic support and resistance as well. So in an uptrend, moving averages might act as a support, while in a downtrend it acting the resistance level. Okay, so we already test with gold. Okay, you can see that acting EMA 200 acting at the resistance level, and lovely what here price action rejection. This is our sell zone, right? Rejection, the body price come in, price lovely price action, and you short here, you hold. TP always at the body. Okay, even though price keep falling, we don't know, right? Because we do not see the chart, but now we see the chart already, so we can say, oh no, you can hold here. But in the real market, we don't know, at least at the body. Okay, acting the resistance. What about acting the support, acting the resistance, acting the support is an also support. So this EMA 50 work well with the trending market. So this is the one. Okay, with strong uptrend. What about if we go to like H1 support level? Okay, we just say resistance, support. Why? Because H1 used to be the resistance level, break above, pull back. Now it's support level. It's our overlap support, right? The wick and the body is here. So that's why price break above, now pull back is at our pullback support, and then continue to go up. Okay, so this is the one, right? How many pip is that? At least 100 pip. Okay, at the body 100 pip for gold. Okay, all right, any question, guys? I will pause here for a while if you have any question. Okay, that's all for today, so we can practice together. Now let's just look at the chart for gold. Okay, now I just leave EMA. Okay, this is resistance level, this is break above, pullback support. I will just leave it like that. Okay, but usually if I identify the key level, okay, I personally don't use SMA. Okay, if you want to use SMA, you can just try out yourself. I prefer EMA. Okay, so let's just identify the key level. This is head time frame. Let's just put on head time frame. Is our resistance based on the wick and the body. That's why you short here. Okay, lower time frame, which is M15. I saw the price action here in M5. This is my price action here. Okay, let's just zoom. Price come to the zone, right? There's a price action, is this one, and then you can short, pull back again, and then continue to fall. Now why price stop here? Price somehow stop at the wick of the support level, is this one. Okay, I draw from the wick. So if I were to identify the support, this is gonna be our support level here. Zoom to see the wick and the body. I'll put here. So price falling to pull back support and then bounce off. You can see that, right? And this how headphone time frame, okay, is 1 to see I think they still can falling more. They go back up, but there might be a news. Just need to be careful. This is gonna be my let's say if price come to this zone, I'm gonna short at this level. This one, meaning that wait for price to pull and I'm gonna short again. Target TP where this is could be your TP1 at EMA 200 based on M15. Okay, so I'm wait for price to go back to this zone. It's about 24.70. I want to short from that level. Okay, but it's gonna be first support, price bounce off back. Where is the second support here? This is gonna be second support. Okay, so now we can use Fibonacci. Let's remove this. $23. Okay, 23 and 50. What does that mean? When price is bounced at 23 percent, meaning this very strong uptrend. But to me, I think it just haven't, because 23 is all here. But somehow this is our support level. Gonna pull back where our EMA. What you can see that strong uptrend, price is just sideways here. So you want to see like that, I think price is just sideways. They might waiting for the New York market later, because there is a news, right? So just wait here. Wait to sell here. This zone 24.70 to 24.72, somewhere around that. Okay, now you can request if you want me to look for your trade setup. Okay, this one is done. Bounce off 30 pip already, is it, from this number 24.90. oh, about 40 pip already for gold. Scalping, for scalping, right? Buy here, able to buy here. TP 350 pip, 35 pip for gold. Okay, if we gonna aim for the EMA 100 here for the TP. Okay, but now it rise at least 35 pip for gold. That keeps rising, but I want to wait to short here. Okay, because based on head 4 time frame, they can still falling more, can like drop more. Stochastic, look at our stochastic. Okay, based on head 4 still can going down more, but it has a bounce up and then continue to fall. Okay, but you can see that why buy here, lovely price action in H1 time frame, this one, right? You can see that our price action here. Price action in H1, another price action here, but in H1 you see really clearly your price action right here, right? Okay, you guys can request any pair you want me to have a look for you guys. I still have 5 minutes. Any any pair you want to request? Nobody want to request? Okay, for gold is this one. Okay, okay, that's the key level for gold. It's here. Go to EU. Okay, my EURUSD is still the same. first resistance, first support is right there. Okay, so somehow my first support is close to EMA 100. Okay, my EMA 100 which is green color. Okay, and second support somehow close to EMA 200, and we somehow have pullback support and 61.8% fib level, 6.8%. That's my level for EU. GBP somehow again is acting at the resistance. It seems like now they might break, but one price come, you can see that rejection and then falling how many pip from EMA to this one, 35 pip. Okay, now it's acting the resistance, but I think it might want to break above. Okay, so for the sell zone for the GU later, okay, this is gonna be first resistance first, but of course I will highlight the zone. Okay, this is my second resistance. I will identify the key level first, and I use Fibonacci. Support level. This is the support level. Okay, break below, pull back. Now we sell, right, because they break below already, and somehow here it's about 61.2, and this one is about 83 for the stochastic. Now we can go to the lower time frame to see, is it divergence here? No. Overbought based on M15. Okay, M15 divergence here. Okay guys, price come to the key level, our confirmation here. Okay, that's why you short. Sell here how many pip? 24 pip, about now 24 pip. Okay, it's like I just mentioned, for the currency I aim at least 20 pip for my TP. Okay, this is already key level rejection. M15 they have here, then we short. All right guys, any question? Okay, if there is no, okay, let me highlight the key level. Okay, this is the one for the GU. Okay, all key level here, and this is gold. So again, I'm waiting to buy gold at this level at the second support, not gonna buy at the first support. Okay, all right guys, that should be all for today. I will see you guys again in the next webinars. Okay, that should be next week. Okay, so next week I will see you on Tuesday, same time guys. Happy trading. Bye for now guys, take care. Thank you so much for your time. Okay, bye guys.